Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Monday, April 21st, 2014. Hope everyone had a nice holiday weekend as we get back into things. Today's what we call a hangover day, which means very light volume. A lot of traders are still with their families or kind of getting back into the swing of things after their trips away with family and friends and so forth over the weekend. So, in tune with that, it means very, very light volume today, which is exactly what we have. It's almost basically a quarter after 11, and we've only done 23 million on the SPY. That's ridiculously light. That's including pre-market. That's including, again, the first almost 2 hours of the trading day. So we're on pace today probably to do around 50 to 60 million, which will be right around the lightest trading day of the year. And with that comes a couple things. Number one, anytime you have light volume, you generally will expect the markets to be neutral to positive. All right, that's the way I was going into today, and that's the way I'm going to continue. And right now, you can see that the markets are up 35 cents on the SPY. Initially, we had a little bit of a float up, then we had a little selling, and now the lunchtime volume, which is even lighter, is coming in, and that's going to lift the markets up just a little bit. But again, my prognosis is for a flat to positive day today. And then I think once you get into the coming days, you start to see some weakness reemerging. All right, in tune with that, I took profits on Netflix today. All right, we took about a 7% profit in basically 1 week on Netflix and FLX. Why did I move out of Netflix today? Well, basically the only reason is because earnings are after the close today. So, earnings could cause the stock to jump 10%, which would have been great if I held, but at the same time, earnings could cause the stock to drop 10%, which would have been not so fun if I was still holding the stock. So, one thing, and this is a great lesson for each and every one of you to understand, is that if you're holding a stock that has given you a good profit already, in this case 7% in 1 week, don't get greedy because earnings are a 50-50 bet. It's the same as going to the casino and you're just hoping. You're putting your money on black or red and you're just hoping they come up. That's all playing earnings is. So if you already have a good gain on a stock, my policy is to take that profit and run, and then let the earnings do whatever they want. If they pop it, great. If they don't, who cares? No big deal. We're out of it already. All right, and that's my policy. So again, good profit there, locked in 7% gain on Netflix. I also initiated two positions. All right, I'm not going to tell you what they are because you got to be a member of the research center here at InTheMoneyStocks.com. But I already initiated two positions that are favorable if the markets start to pull back. One's a short on a specific stock, one's a long on an ETF that really works in an inverse relationship. Okay, so that's what we have going on here as the spiders are inching up just a little bit on light volume. Where's the resistance on the spiders? If you zoom out, you can see it right here. The pivot double top, I actually think we have a decent chance of getting here today. This double top right here is what I'm looking at, and that's at a Pierce of 187. Okay, 187 Pierce, in my opinion, is your level on the SPY as resistance today. If you get above that, which I doubt you do today, then your next pivot would be this area right here, which is the 187.50 level. So 187.55-ish area. So those are your next two key resistance levels. Okay? All right, what else do we have going on here on this light volume trading day? Couple stocks in motion. SRPT had some good key data here. The stocks come in pretty sizably off the highs. Did trade as high as around $40 today. Now it's trading around 35 and change. But again, that's just a big mover. I was just pointing that out. Honestly, there's no trade there whatsoever. These stocks that have these big moves, very low reward to the risk you're taking in either direction. All right, there's no price pattern time, no PPT strategy here that will enable me to give you a high percentage trade on this. So therefore, you just kind of look at it and you say, wow, it's a pretty impressive move. All right, a couple other stocks out there. Let's take a look at number one, Apple. Apple's trading up a little bit. Apple seems to be starting to inch up a little bit into earnings. Earnings are going to be reported on Wednesday. If you ask me which direction this should go on earnings, which would I guess? Now, remember, it's a 50-50, so I would just give you my best guess. But honestly, it's a tricky one. All right, it's a lot of resistance up here. Take a look at this. All right, if we take a trend line and slope it down, I mean, essentially you have this down-sloping trend line is resistance, and right now you're underneath that, so that gives you a minimal upside, and your 200 MA is underneath here to your downside. So actually what you would call this, and this is actually a great example here, this is a triangular pattern, which tells you that most likely it'll break one way or the other on earnings. The question is which way. So, maybe a straddle. This is where you'd use a straddle, I guess, which is an option play. Again, there's always a high risk chance that it doesn't move that much either and stays within the range here. But, if it does break one way or the other, it probably goes significantly in that direction over the next week or two just based on a breakout or breakdown there. So, just something to watch there on Apple. And kind of an interesting chart here. A couple other charts we want to bring up for you guys. Here you can see the chart of JP Morgan Chase. JPM, even with the markets green, barely up. This stock had a bad earnings about a week ago, and since then the stock, even with the market rallying, has barely got a bounce. So that's a pretty poor performance on this stock and continues to be such. Now, if we take a look at Goldman, Goldman had those good earnings on Thursday morning last week. Remember, markets were closed on Friday, and the stock really fell all the way back in and is really hovering around the flat line. So we're seeing a lot of weakness overall in the financials. Bank of America, let's take a look at that one, as that one was stronger last week, but today it's negative today. So again, you can see it had a little bounce late last week, but really it's starting to make a bearish pattern. So, according to what I'm seeing, folks, you're starting to see more and more people get bullish out there again, which means I get slowly more bearish. I'm not overly bearish at this point, but I think probably by Tuesday, Wednesday, I'm going to start getting in that camp of assuming we're seeing the same things we're seeing now, starting to get in that mode of thinking the markets do have some downside here. Okay, so that's what I'm kind of angling towards right now. If we take a look at some of the bigger names from action-packed last couple of weeks, we see Facebook's up about $1.15 on the day. That's taken a big hit. Never filled the gap, though, which tells me the next flush on the market's going to fill the gap. If we take a look at Twitter, Twitter's up 30 cents on the day. A little bit of resistance here. It's been hammering into the last few days after breaking to the downside there as well. So kind of some interesting price action there. Yahoo had a good bounce last week off the Alibaba earnings and numbers, and the stock since then has started to fade a little bit here and just gone in the sideways move. So we'll see again how this all plays out, but very interesting price action on these charts. Let's quickly take a look at the commodities out there. We'll start with the dollar just to get a sense of where the dollar's trading. Looks like the dollar's trading up just slightly today. Very minor move. Here's your support. These two moving averages are short-term resistance, but minimal there. You also have a down-sloping trend line that you'll keep an eye on right there as well. But for the most part, I would remain neutral on the dollar, as there's just too much support and resistance everywhere to get you a clear view on where this is going. Gold today, GLD down about 73 cents. I talked about thinking that there's more downside on gold last week, and that has begun here. The real reason here, if you just want the simple explanation of why you would expect downside on gold, is because this is just a classic pattern. So you have the down move, the bounce, which is an intra move down. So you intra this move, you're inside that, and then you started to move down. And really, this low here, this move down should take out this low if this pattern plays out correctly. So, I mean, it's just a matter of factoring in the odds and everything that we're using here to profit as much as we are, just using that same methodology and kind of extrapolating on this chart. So you should still see some weakness in gold in the coming days. Although, again, once it gets a little bit lower, there might be an opportunity to go long. We'll have to keep an eye on that. Silver today, SLV continues to fall. Same thing here. So you have your inside bar move right here, inside of this down move, and then again you're starting to break down. This one already took out the low there, and this is going to go to double bottom. So double bottom is where you should expect this to go. Okay? In the short term, let's take a look just at a couple other charts out there. How's oil doing today? USO flat on the day. You can see it's continuing to hover against this double top right there. The longer it hovers up here without a significant pullback, the more likely eventually it breaks to the upside. So be aware of that. I think that's an important little factor to keep an eye on. Okay? And then taking a look at natural gas, UNG had a great day on last Thursday after inventories showed a smaller build in inventories than expected. And now we're seeing it basically pause today. But I think, honestly, I wouldn't be surprised to see UNG go up higher. I don't think there's a setup here for me to play, but just in terms of looking at the chart, seeing the wide range bar off the moving averages on Thursday, you would expect a little bit more upside. One thing just to note here is that same pattern in reverse that was on the GLD and the SLV, upward move, inside bars into the moving average, you expect to pop, and that pop should continue maybe as high as double top here. And I think that's a fair possibility, so something to watch there as well. JJC, which is copper. Copper's really been in a tight range. I mean, look at this. For the last 2-3 weeks, very, very tight range. Could be some bullish consolidation. Although, again, with the 50 MA above it, it makes it a little bit on the tricky side. But this would be based off this up move and inside bar action. This would be slightly positive on the charts. All right. Let me just see if there's anything else. Let's just jump back to the SPY and see how that's moving. Looks like we're just hovering in the same range. Again, only 24.5 million at almost 11:30 now at the time frame here. So again, going back, you can see a little bit of a pop, a little bit of a pullback. Markets again flattish to slightly positive on again 25 million at 11:30, 2 hours in to the trading day. In terms of anything else out there that I want to watch, again, earnings from Netflix after the close today. I think we have some other key earnings coming out as well, but Netflix is the big name today. I think tomorrow you have Amgen, which is a big one. That'll be big for the biotech index. Amgen and Gilead Sciences, I believe, reports as well. And then Apple on Wednesday will be huge. There's a bunch of other big names coming out this week, too. I think this week is like the biggest of all weeks for earnings, which means the Gap plays in the chat room should be just spectacular. And again, I think Nick has given his Gap webinar this week, so those of you that want to learn how to find those gaps on your own can take that webinar. Just come to our website, sign up underneath the Elite Education tab for webinars and online courses. All right, on that note, I'm going to bid you farewell. And again, markets just holding flat to positive on this light holiday session. Talk to you later.